Well, hello everyone. K Kim here from the Traders Club, and well, as I have promised on the last video, I think it was over the weekend that I'm going to try to put up these videos on a weekly basis. For the midweek update. I've been keeping up with semi-weekly, every 2 weeks of a live midweek update. Feel free to sign up for that. We're gonna do the live one next week, and then every other week, we'll switch it up. We'll do video, and then next coming week we'll do live version where you guys can come and listen to me live, and then week after that we'll do static recorded video just like these. And so today what we're going to do, we're going to look at market indices here. Some of these ones that we're going to look at today, Spider, Dow Jones, NASDAQ, Russell, and financial, and see what has happened so far since the last time we looked at it. I think that was on Sunday here. So 3 days has gone by. Nothing much happened, but those 3 days actually, we really didn't do much, but there's a lot that had happened as far as the technical, as far as the minor term is concerned, right? So obviously we're going to look at that and see, and maybe trying to forecast for the rest of the week and next week here. So let's get to it here. Looking at Spider, and something that we talked about as far as the candlestick analysis is concerned, right? When we look at candlestick analysis, they cannot stand alone. So when we look at S&P 500 daily chart right here, something that we talked about, I believe we talked about these some of these candles that we started seeing. This was a doji-like hammer sentiment candlesticks reversal candle there. And we had a two hammer-like candles there. There's an inverted hammer right about here. And then we talked about bullish bell hold right about here, which then next day we had kind of a bearish candle, and then next day we just had a very, very fast reversal. Kind of looked like engulfing, or the what is that? Possibly one white soldier there. But one thing we talked about was as far as a candlesticks analysis is concerned, they cannot stand alone. So what I mean by that is, just because you saw a certain candle doesn't mean that it's always going to play out. It's going to just right away, it's going to reverse to the opposite direction, right? And sometimes it does. I mean, you can see, sometimes it does do that. But, obviously, if you want to look for some higher probability analysis, looking at candlesticks, you really want to see some follow-through with that, right? So, once you get a candlestick, like a hammer, like a doji, they cannot stand alone. They can be nullified very, very quickly, right? Even this doji right here, that was a kind of a pivotal moment for that doji, because if we to continue lower, that doji would have been just resting or continuation kind of thing. However, because we gapped higher, that follow through made it possible for that doji to be powerful. Do you know what I'm saying here? So same thing happened here. We had it's not a textbook, but two hammer-like candles there, and then we had some follow through that made it, made it more potent for that doji or those candles there, with an inverted hammer, which is the weakest reversal pattern there. And then obviously that inverted hammer definitely needed some follow through. And then what it did was we had this guy come in, kind of looks like a doji there, a little bit looked like a hammer there, and then continued higher, right? And then same thing, we talked about was possibly this guy possibly being bullish bell hold. However, that can, it's almost like an inverted hammer, but textbook is bullish bell hold. It couldn't stand alone. Next day, obviously, it came down, and pretty much what it looked like, it's going to nullify that. And what it needed to do was close below it. But we did pretty much close right at it, right at open or right at close. But then it needed follow through, just like even this candle, where you could look at it as a bearish engulfing. It needed a follow through. Well, next day it was matched up with this guy. So by this guy coming in, pretty much nullifying this pressure, it kind of made this bullish bell hold, or you can even look at it as the inverted hammer. Again, terminology is not important. Everybody wants to, argue about this is that, well, that's not a textbook pattern. That's not important. What's important is a sentiment that it conveys through that candle. That's what's more important. You're trying to find textbook patterns all the time. Those are the people truly don't understand how technical analysis work. Anyway, So, almost this guy came in and pretty much made this guy to be alive. So this guy, it was assumption that that guy was dead because of this, this selling pressure the next day. And then when it was reversed quickly, that guy was still alive, and that could be that pivotal candle. And then what happened? Few days, we didn't know. And something that we talked about was, in the last video, was to watch that 50 EMA, because 50 EMA it has a very impressive resume. Looking at this this chart right here, you can see that 50 EMA acted as support in the past. Once we lost that 50 EMA, came down. Once we reclaimed that 50 EMA, had a pretty good bullish run here. We bounced on the 50 EMA here. We lost it, got back up, and reclaimed that 50 EMA, and 50, 50, 50, and because of recently it has been acting as, not recently, I mean like, this early summertime, May and June here, acting as a strong support 3 times here, and how, we bounced from that. It is a definite level that, that you want to watch. And then we lost it pretty quickly here, right? And then we came back down, and what we needed to see at this point, that we needed to see 50 MA was going to act as resistance, right? Sometimes what happens is old support becomes resistance, right? New resistance becomes a support. Just like that, old support can become new resistance. So we hit that 50 MA pretty precisely, right on that, and then we pulled back a little bit, and then we came to fill this gap yesterday, and then it kind of looked like a little bit of bull flag, right? It kind of did look like a bull flag here, but because we're still pressured by that 50 MA, it wasn't, it was kind of still tough to say that that's a bull flag. And again, after this kind of decline, looking at this, I would call it a more of a minor term in my time frame. I wouldn't call it an intermediate term. I'll call this intermediate term, and I'll call that a primary term, but I guess everybody has a different time frame on their trading style. We've been focusing on position trading, so which means we're getting to trade. We want to hold positions minimum several months to 6 months to a year. But so and because of that, for us, this is really a minor term here. But so minor term is concerned. We just really looked at this as, well, it's tough to say it's a bull flag yet, because of the, it seems that we're still under, under duress, right on that 50 MA here. So what we wanted to see is that if we can able to gap back above 50 EMA, right? Because once we get back above 50 MA, good things do happen for the buyers. Looking at the historical pattern, 50 here, 50 there, got back above 50, got back above 50, got back above 50, got back above 50, got back above 50. Isn't that interesting that 50 has been that pivotal level to watch? And also that 100 SMA is definitely level 2. So definitely that's definitely something that we've been watching here. Just because we close slightly below 100 SMA does not mean that it's going to continue low. That's why it's more important that you identify higher lows and higher highs than you trying to find trying to find these uptrend support broken, right? Last time here, this uptrend support, what it seems to be broken, I even remember this. Actually, at first, this uptrend support was slightly broken right here. It got right back up here, right? You can see that. And so that's why one thing that, we trying to focus more on is that what's more important than uptrend. So sometimes you can lose this uptrend support. Just because we lose uptrend support does not mean that that thing is going to roll. It could certainly happen. But looking at a bigger picture does help, and what has been happening, right? What had happened, there's higher probability that it's gonna continue. So, obviously 50 MA and that 100 SMA was definitely, important level, and we continue to hold that 100 SMA level here. Again, these 2 times we got slightly below that, but we are still in that vicinity, right? 100 SMA. This time, pretty precisely, we bounced off the 100 SMA there, and then so underdress on that 50 MA here, a little bit of pressure. So is this a bull flag here in this very minor term here, or is this gonna be maybe lower high for continued lower, right? So that we don't know that. This is a reason why we gotta look at it every single angle. We can't just look. You know how people always like to argue, like they like to say, well, because of this and that, this is a bull flex, there's a bullish. Well, because of this and that, there's a bearish, right? Because there's a 50 MA here, and this is acting as all the new or old support, new resistance, so that's bearish. Well, this is a bull flag, that's bullish. They're both right. You know that, right? So as technicians, what you want to do is that you have to bring everything into the table. You got to gather evidences, and then you have to go with the weightier method. But at this time, I mean, looking at a primary term, obviously we're on an uptrend, right? Looking at a primary term. Looking at the intermediate term, also we're on an uptrend. Looking at a minor term, we're in a downtrend. We're in a downtrend looking at a minor term. So today was important coming in today. We're not sure if it was going to gap down or gap higher. And then, well, we gapped higher. We did stayed above 10 EMA, right? Getting above 10 EMA is a good first initial stage, because last time we got back above 10 EMA right about here. We did have a pretty good bullish move last time, 10 EMA right here. We were able to grind higher there. So we got above 10 EMA, and then we did slightly got above 50 EMA. Again, that's what I'm saying about it. So yes, we did get above 50 MA, and that's a good look. That's a good look there so far. And then we did close above this low. So this, at least looking at this minor term here, does look like a little up move. Bullish is a bullish bull flag here. 2 days of resting, and then it seems to be that we had another leg or another follow through. So here's the thing. This is a very, very important level, because we can still fail, because we have not completely reclaimed that 10 or 50 MA, right? We did reclaim that, but we haven't completely done that. So what we need is a follow through. If we can have one more, right? We can have one more bullish day. Also, there's a gap here. Gap levels can act as resistance level. So if we can have another bullish day and possibly, possibly get partial or partially fill that gap next day or next few days, or remaining of the week, I do believe that the trend could continue. And I think we might get some congestion going on here. I don't know if it's just gonna go straight up, though we've seen that happening in the past, like something like this. But with this gap that is associated with this recent price action, I'm guessing we might feel it or something like that. We might struggle here and kind of have to wait for the have to get a support or the help from the 50 MA, just like it did here. So we might see something like that, or even we might able to kind of bump his head right on that around that or that gap area. But so what you want to see is this thing seeing some follow through in remaining of the week here today and tomorrow, or tomorrow and next day, and then starting to kind of eat away this air pocket. Once we can see that, we might see some congestions, but I do believe that we'll continue higher and even make new highs and breaking above 198-ish level there. For the reason why I think that's what's going to happen is because that's what had been happening in the past, right? Higher lows, higher highs. And what happens is when it pulls back, when it comes down to create a higher low, when it goes back up from that level. So let's look at it here. It went up, create a higher high. When it pulled back down to create a higher low, when it goes up from that higher low, it makes new highs. So with that perspective, I would have to say that there's higher probability if this was confirmed higher low. I think we're getting there. Then there's a good chance that it's going to continue higher to make new highs there, right? So one thing also I want to look at is the Nasdaq, and Nasdaq is important because there's this level that I was kind of looking, and I wanted to make sure that we clear that level. Obviously, first of all, what we have to look at is 50. Again, 50 MA has always been that pivotal level. You can see how 50 MA always kind of seems to be that strong level to watch once the trend gets development, right? So that 50 MA did act as support right about here. And one level that I was watching is this level right here. The reason being is that because, I talked about this on my last video, is that we need to get above this level because there possibly a potential head and shoulder formation threat from the bears, right? Again, this formation, even if we did form this, that's not a huge threat where this whole market is going to start like, crashing down. But at least with that, what we could have seen is that maybe some more downside to about 200 SMA here. But instead of that, what we did was today that we got above this level, which is potential right shoulder level, and then we closed above it confidently, right? That's a pretty confident looking candle there. We don't have much wicks at the top or bottom, and this gap that was open this morning, it held, it sustained, it was not filled. So still there's a bullish pressure coming out of these gaps here. There's a little bit gap which was filled yesterday, but today this gap was not filled, which means there's a much at least for minor term, there's much pressure, bullish pressure there. Also, it's starting to kind of eat away a little bit of this air pocket, right? So that's a good sign. And so, once you start to taste that rainbow, you don't want to stop. So it probably wants to get back up here and fill that gap. So Nasdaq looking much bullish, more bullish than any other indices there. Let's look at Dow Jones here. Dow Jones, we've been looking at 200 SMA. Because 200 SMA has been that crucial. So when you look at these moving averages, what you want to look for is that not just moving averages itself. What you want to do in the past, what moving average has been acting as strong pivot level or strong support level? That's what you want to look for, right? When you can able to identify that. Then you can able to say, hey, the next time when we start to come down, that might be the level that we're going to start to find bounce, right? So you can see that 200 SMA, we bounced there, 200 SMA, we bounced here, 200 SMA, we bounced here. So obviously 200 SMA here, we are bouncing. We haven't completely bounced up, but we are finding some support. It's not, the reason these moving averages work, a lot of times people don't understand how technical analysis work. Is that it's not that everybody's watching 200 SMA, you know that, right? It's not that like every single traders and investors watching 200 SMA, and as soon as we get to 200, we're going to start buying. That's not what's happening. Is we have, we're human beings, and what we have is we have what we call instincts, right? Or these feelings or emotions. That's what make us human beings, and because of this, we are human beings. Sometimes because of our emotion, we're irrational. We're irrational beings. Sometimes we make stupid decisions. Sometimes we do weird things, right? So, but what happens is also that irrationality, that emotion, that feelings, that instinct, what that makes us to do is sometimes we do things also over and over and over again. Repetitions, right? Repetitions. That's what we're predictable, right? For lunch, you always eat the same thing, same place. You go to church, you always sit at the same pews or same level, right? If you're sitting at the upstairs, you're sitting upstairs all the time, right? That's what I'm talking about. So what's happening is once we get a certain pullback, right? It's not that everybody's watching 200 SMA. Certain people, majority of people, they realize, well, this is a level last time I bought and then I made some money. So we had a little bit of pullback, I bought it here, I made some money. A little bit of pullback, I bought it here, made some money. So this time around, I'm gonna buy it here because that has worked for me, right? And then we pull back again. Well, last time when it pulled back about this much, I bought some there and then I made money. So this time I'm going to try to do that again. And then that happened to be around 200 SMA and then got up, right? And then we pull back again. And for this reason, technicals work and uptrend supports work. The pivot level works because people members, right? People remember, you remember your good time, your bad time, your worst time, your horrendous times or your very, very pleasurable times. You remember those times and you wanna replicate that, right? And so that's what a lot of times people do. Because of that repetitions that we have or the instinct that we have, these moving averages continue to work for that reason. And so that's the reason how technicals work. Not just because we drew a freaking line with our crayons and because of that it's gonna bounce. That's nonsense. So anyway, looking at Dow Jones here, minor term, we're still in a downtrend. Again, I'm calling this a minor term. Still a downtrend here, but we do have a little bit of bull flag right here, kind of like spider, but we're not near 50 MA. 50 MA been acting as a bit of support in the past, so that could act as resistance. So I would have to say benefit of doubt still goes to bears on Dow Jones in a minor term, unless we start reclaiming this 50 MA and start getting back above some of these. Getting back above some of these air pockets, that gap here, and start eating that rainbow there, right? So let's continue. Look at Russell here. Something we looked at on Russell is, one something we've been looking at on Russell is that because Russell is the weakest link out of all the indexes. So how do we know, Russell is not going to drag this whole market down, right? And one way to find out is some of these indicators can help you out. And if you don't know how to use your indicators correctly, these indicators, oscillators, they can actually hurt you. So just keep that in mind. And again, when you look for patterns, you can't just look for a pattern. You gotta make sure it has worked in the past. If it worked in the past, it has a good probability it's gonna work in the future, right? So what we looked at was, here's this. Okay, so last time, again, we got these oscillators going on here. Last time we started making lower lows, and then we start making this bullish divergence. This is what we call bullish divergence on MACD and stochastic, and RSI not really. And then what happened? We bounced here, and then we start seeing something similar just recently right here. We got lower low, not on MACD though, but look at on the RSI there, and look at on the stochastics. It's not as well defined as these two. But we got that going there, especially at this kind of over sold status, right? And then we starting to clear this recent resistance level. And so this was when we looked at this, maybe a week ago, and then we said there's a potentially this hammer candle might find some strength, and you need some friends to come with it and to bring it up. And so we start to seeing that happening, and we start to see a little bit of price action continue higher. But as far as the moving average is concerned, well, last time 50 MA did act as resistance. You can see that here and here. We need to reclaim that 50 MA. Last time we reclaimed that 50 MA to the upside right here, that's when we found some strength to the upside. So 50 MA definitely did act as resistance on July 24th, and then it is also acting as resistance currently. You can see that wick right there. So what you want to see for the buyers to step in and push this thing back, which I think it will, but it might have it could even come down again and then do something like this. But what you want to see, if you want to see Russell getting back, or the small caps to find some strength next few weeks, that you want to make sure that this thing gets above 50 MA and reclaim that 50 MA. Just because it reclaims that 50 doesn't mean it's going to go. It could have a pullback and then go back up, thus creating that higher low, right? Low and a higher low, higher high, boom, right? So what you have to do is you have to gather all these evidences together, and then you put them into work. Like it's a crime scene, and then you're trying to figure out, what happened, who killed it, can you revive it, can you resuscitate it, or is it gonna just is that gonna continue lower, all of that stuff, right? Lastly, what I want to look at is financial sector. Something we looked at on the financial is this one. I want to show you this here. We've been watching this on financial for some time now. Is that this is what we call bullish divergence. We just looked at it on the Russell, but we're going to look at it on financial. But this time we're going to look at it on 65-minute chart. You can see that what we have is slightly lower lows, and then we started building this bullish higher lows on the indicators and oscillators. And once we clear this neckline, this is what we call neckline here. You can see that. You can look at also double bottom. This is a neckline, right? We close above that. We came down, retested it, and then we bounced from it, right? That's a great sign. And in that, we also established this kind of a very, very short-term uptrend support there. So looking at financial, short term looks like we found some support right about here, and then the level that we still watching is this level. But however, you can see that 50 MA, it is still giving a little bit of problem. You see how 50 MA keeps showing up in every single indices. 50 MA is very important because last time it acted as support, and then now it is trying to act as resistance. The question is, are we going to come back down? Possibly even double bottom here, or maybe roll lower. We don't know at this point. Or is it going to continue higher? That's the question. So we just looked at Spider, Nasdaq, Dow Jones, and Russell. Obviously, Nasdaq being the most strong, most strong bullish chart there is, and then spider kind of in between, and then Russell still looking much weak, but we have a bullish divergence on daily chart. And financial, we have 65 minutes bullish divergence. However, we are kind of we're still pressured by the 50 MA there. So so we got all the information, and the conclusion is this: basically, the primary trend is up. Right, and then in the minor term, we are starting to see some momentum going. So bulls want to get this going, but there's a little bit of pressure coming in. Looking at the Dow Jones and the financial sector, right? Spider looks a little bit more confident today, the way it closed, how it closed, a little bit above that. But if we can able to see, so it's very, very important next few days. If we can able to, I'm guessing. I don't know, something about it in the last few months or so. It just seems like Friday's been a good day for the market, for the bulls, right? So I'm guessing maybe Thursday, Friday, rest of the week, if we can have another bullish thrust by the bulls, I believe that is going to do it. We might get some congestion as we start to go up. We might get some volatility, but I think we can fight it off, and then we can continue higher. So there you have it. There is the full analysis there on the S&P 500, the Nasdaq, the Russell, and the financial there. I just spent 26 minutes, analyzing that. So I don't know if I can go through all the ones that I promised that I was going to go through, but I'll go through them very, very quickly here. The bonds. I want to talk to you guys about this. I've been talking about this for a while. I mean, we've been heavily involved with the bonds since about 109ish, right about here. So, and then one thing that you want to look for is, especially, it's all about your time frame. But for us, we're going to position trade this, and so when we look at this, you can see that very, very big double bottom there. And once we clear that, we create a higher low, higher high, higher low, and then slight higher high there. And then this you can look at this possibly intermediate term. We do have another higher low, and we're just hanging out a little bit. But you can see today we're finding a little bit of support. So if we can take this out, I do believe that it will continue. Our next target is about 120-ish. That's where we'll probably close some of our position there. So that looks to be healthy and good looks there, to be honest with you. And bonds, what's going to happen is what they're going to do. They're not going to always have a smooth run. They're going to have up and downs, but then that's why it's very, very difficult to trade those. I'm talking about the bonds. Trade those. In the short term, you really want to do it long term here. RGLD, we've been involved since I've been documenting everything here since right about here, 67, 68-ish, right about here, and we held through for a few months now, and then today had a great run here. So this is a great consolidation we saw, and a lot of times after a bullish run, is it going to be a pullback or is it going to consolidate? That nobody knows, right? We have a huge run here, we pulled back and then consolidated. Well, we consolidated here, pulled back a little bit more, and then we got back up. And so when we started to get some bullish move here, what was going to happen is I wasn't sure if we were going to have a pullback. I wasn't sure if we're going to have a consolidation, but fortunately what happened was we consolidated, we broke out, we're continuing to be higher, we're continuing to move higher. So my next target is around 90-ish or so, right about here. If it can overshoot, if people get really excited and they just emotionally start getting it, it can even get to about 95, 96, fill this entire gap before another big pullback there. So we're gonna continue to hold this, and then we're gonna probably take some positions at the top there. AEM, we also been heavily involved with this since late March here, since about 31, 32-ish, right about here. We had to go through these. We went through these painful decline, and then we saw some light here with another decline, and that's when I started to put up the post there, and we're looking at this potential this inverted head and shoulders. And then once we got that 10 EMA, 50 EMA got reclaimed, we shot up, and then we started closing our positions here and here, some of these levels, and then we initiated some more positions once we got back up here. So somewhere about here we added to our positions and did very well last few days. What happened was we are back above 10 EMA, we reclaimed that, so that's a good thing. And also looking at a big picture, what we have is humongous, this massive inverted head and shoulders, right? And then the neckline level, right? This is a neckline level, right? All resistance, acting as a new support. Isn't that great? And so when it goes up, this actually really overshot it, right? And then it came down hard, retest this level, and then going back up here. Again, this is a miners, right? These mining companies, they're a bit more volatile, but when they run, they can run. So again, if everything goes well from this point on, I'm shooting about 52 or 50-ish here for another leg up here before possibly another pullback for us today. So that's how we love to position trade, is that we get into a position, you know, sometimes we have to hold through some stuff, and then once it starts to run, we start closing our positions, wait for a pullback, add some more, and then wait for a run again, start to close some positions, and then wait for a pullback, and wait for a bounce, and then add some more. That's how we love to do it, you know, and that way, you know, we can able to, lock in that gain and then wait, and because we can able to forecast, you know, not precisely like right at the top, but when we get to a certain level, we start to realize that we're gonna get it's getting stretched out, right? So there. You know what? I'll look at Apple here real quick. Apple, you know, looking at this, I'll go there quickly. You're looking at it. We have this kind of pivot level here. We just established that by when it found support right on that 50 MA. It's interesting today. There's, you know, we talked a lot about 50 MA, and 50 MA has always been that kind of that moving average. Sometimes I call it like a magic moving average. That's why I have it on dotted line, because in many times we get any kind of pullback, that's the level you really want to watch, is a 50 MA, if you can reclaim that or if you lose it or something like that. So we got back above 10 EM here and a little bit of resistance right about here. This is what I call recent resistance. We closed above this. So it looks like we want to get back up here and fill this gap, and then we got higher lows and higher highs intact. So, you know, I mean, if you've been riding this, I suggest that, you know, just follow that 50 MA, continue to ride it to the upside. You know, we talked about possibly be Apple having that, you know, the bearish divergence, and obviously something that I talked about is these bearish divergences. What you want to see is you want to make sure the price action confirm these divergences, right? Obviously, price action recently is not really confirming that, you know, but you know, maybe some people start thinking about there might be head and shoulders here. We don't know that yet. So this bearish divergence is what kept me not going into this position or starting a new fresh position. But if I've been holding this position since this gap up or something like that, I wouldn't have closed my position, or at least all of it. I would probably close some, but I would have kept some of it because the price action is still bullish as of today. That's how you can able to use these indicators and oscillators to kind of, you know, kind of gauge and to protect some of your gains and things like that. So know that there is bearish divergence forming, and you know, but that can be okay, let me explain how they can nullify. You know, that can be nullified if MACD can get back up like this. If we can get back above this level, then that bearish divergence can be nullified, and same as RSI, and then the trend could continue. But looking at this here, so there's probably bears probably be talking about potential head and shoulders here. We slightly got above that. Again, it's tough to say as of today. If we start feeling this gap here, I wouldn't worry about that head and shoulders there. The head and shoulders is not going to be confirmed until we lose that 50 MA. Okay, that's when the head and shoulders are going to get confirmed. Until then, benefit of doubt still goes to buyers. It looks like with the higher lows, higher highs here, it might, you know, go up and make yet another new highs there, possibly 102 or so. Let me go through Tesla here. That's the thing about it, is people always like to you know, fight with the trend, and that may be because people are very, very short term. They want to get in here and they want to get out there. You see, well, I've been long since 220-ish, right about here, since middle June, and so I've been holding since you know, since about 2 months now. So I really don't care about this one day little bit of pullback there. But something that I shared of recent on my recent post was that line chart, right? It wasn't that sometimes it's good to look at a line chart, because with all the wicks on the candles, it gives you that, you know, different perspective. And also that my theory is that a lot of times these traders, investors, they tend to remember the closing price rather than, you know, the intraday price. Obviously, you know, line chart is made of closing prices, right? So so looking at the closing price basis, we did make new highs, right? And last time when we did make new highs, we did see a pullback. You see that? So there's still a chance that this thing could have a pullback. But if we can able to hold still about 250-ish level, 250 to 255, and possibly meet with 10 EMA. I think that might be what's happening here. Last time, same thing happened here. That 10 EMA, look at the 10 EMA acting as support. Isn't that great? Your 10 EMA right here. So this thing coming back up here, maybe meet with 10 EMA and then bounce. So, you know, I think that again, my target still being 300-ish before, you know, I close some position. My ultimate target is still 333.40, but before we get there, we make it another pullback and then shoots up. So I might, you know, close some positions around 300 and wait for a pullback, maybe retest or resist new support, and then add some more, and then boom to 340 there. Let me do one more, Google, and then we'll call it a night tonight. Something we've been looking at on Google, and I probably want to post about this as well, is that the again, I wanted to show you this, is that a 65-minute chart here, and we've been looking at this, and this is a reason why we stay with our positions. Where we I forgot where we went long here. We went long right here about 570-ish, and we held through this pullback because we're looking at big picture, right? Higher lows, higher lows, higher lows, and then you can even possibly say, well, this might be head and shoulder, maybe, right? But we don't know that yet until we get there. So what we're looking at though earlier is at the 65-minute chart. What we have is bullish divergence right here, and because of reason we are anticipating, and then we cleared just recent pivot or recent resistance level. We claimed it, and then it got back above. And so so today, looking at the daily chart here, you can see that we had a pretty good move today after forming that 65 minutes bullish divergence, and then we also kind of forming that higher low, right? Higher high, looking at a big picture there. So we did reclaim 10 EMA, 50 EMA. That's good. We do have a gap here. I think to be very safe, if we can able to close above this level, right? If we can fill this gap and close well above 595, I do believe we'll continue. I wrote an article. My ultimate target is 700, but I think I'm kind of shooting for about 640-ish. Before closing some positions, wait for a pullback, possibly retest, and then shoots back up to about 700 there. So I think I think if the market continues to illuminate a bullish environment for the stocks, I think Google will do well, Apple will do well. Especially Nasdaq looks so well today. I think that these equity positions will do well. If the indices do well this week and then next week again. So again, looking at the market, like I said, like I was explaining earlier, that we just need another push. If we can have another push on the spider there, and did well today. But Spider did well, Nasdaq did really well, Dow Jones, Russell did well, but then they still need more. So for that reasons, we will need one more push. If we can have that, I think the market could continue higher, and some of these equity positions would also do very, very well. I try my best to go fast, but it also still took about 45 minutes there to able to analyze those indices and positions there. So if you have any questions, you are always feel free to leave comments on the comment section there. If not, I'll come to you guys by video next Wednesday. Next Wednesday we'll do live midweek update. So feel free to sign up for that as well. So all right, we'll talk soon.